Welcome back. Markets are absolutely flat, but we have plenty to discuss with Rakshit Ranjan, who is our next guest on the show. He's from Marcellus Investment Managers. Rakshit, good afternoon. Just about good afternoon. Thank you very much for joining us today. Reema, Pavitra and I, we were looking at some of these very interesting themes that you folks at Marcellus are now highlighting. I want to pick up on one of them. It seems that you're convinced that investing in South India-based companies is probably a better bet in terms of returns than those in other regions in the country, in the West or in the North. That really caught my eye. Explain to us why and what's that translating to in terms of stocks?
Sure. Good afternoon. Almost good afternoon. Thank you for having me. Thank you for having me on your show. So yes, you're right. This is South India dominance is one of the themes that we've been focusing on more recently. So it's very interesting when you look at the data of average per capita income of South versus rest of India. About 5-7 years ago, South India average per capita income was about 35% higher than rest of India. Today, it is about 50% plus higher than rest of India. So the jaw is opening wider and wider as time is progressing. And largely it is because of better quality of skilled labor being available, a very well-established transport infrastructure, and in many ways the rule of the law can be actually taken for granted in South when a business is set up. A little more than the rest of the country. So this is something that we've picked up, and hence when it comes to companies which are offering products and services that cater to the rising affluence of South India more than the rest of India, where capital allocation decisions are more towards expansion in South more recently than the rest of India. So those are the priorities that we are actually focusing on in our portfolios.
We knew South dominated in terms of movies, but interesting stats over there, Rakshit, to talk about, their per capita, GDP income. And, I was reading the blog, even in terms of vaccination, the mortality rate, etc. The other theme that you're looking at, which could be a big investment driver, is that women today have more money and they're deciding where they will spend and how much. They're controlling the spending, even in the family. Could you elaborate a little bit more on it, and which would be the stocks that could be a play on this? So Nykaa, for instance, right? Their product services largely cater to women. So would you look at a business model like that?
Yeah, so very, very rightly picked up. That's also one of the themes that we've been highlighting. So if you look at, let's say, specifically the IT sector, even in absolute terms, average bank account balances of women is higher than the bank account balances of men. And even in the non-IT sector, the sort of rate of rise of women-oriented aspects of both savings as well as expenditure is phenomenal compared to the wider household. And hence, I mean, the reasons for this are also quite obvious. It's been about 2 decades that we've been hearing the volume of literacy, the quality of literacy coming out of colleges, out of schools for women is higher than men. With a 10-20 year lag, this is leading to now an impact on the economy. Because as these women who passed out from schools and colleges 10 years ago, they enter the productive population set, they add more to the economy than men. So that's a very strong theme. I think it'll certainly accelerate further in the sort of decade to come. The stocks that we are picking up, yes, I mean, it's not always obvious that every stock that meets the theme should become a great investment opportunity. So bottom up at the same time top down is the sort of approach that we follow rather than only top down. So Nykaa is certainly part of our coverage. We are a little not fully sure of some of the capital allocation decisions beyond some of the core, and within the core as well, their sort of a degree of growth that we might see. So it's not yet in any of our portfolios. But having said that, for instance, early last month, we added in 2 of our portfolios Trent, the West Side Zudio retailer. Trent is a very big play on women apparel purchases. Westside has been around for the last 25 years. We've all known that. A large part of the trend's current share price factors in Westside's beauty. But when it comes to Zudio, it's a powerhouse format that has sort of found its footing, found its store economics in the last 3-4 years in a very meaningful manner, and expanding at a very rapid rate. 350 stores currently, and opening around 200 stores a year on that base, generating 30 to 35% return on capital employed, which is a very healthy one, and contributing to more than a quarter of Trent's profits already, and propelling growth. I would use that term, propelling growth forward. More importantly, it's Trent has also become a sort of a incubation format for various new formats like Mizbu and Samo, and Star Bazaar appears to be approaching break even at a store economics level. So a lot happening in that company, which still 4 or 5 years ago, it was largely all West Side generating profits, and not much beyond that. And hence we've added that to the portfolios.
Rakshit, we leave the conversation there for now. Thank you very much for joining in. Zudio has been quite the success story, and now everyone's trying to understand what their strategy was. Gross revenues, more than 3,000 crore last year. Well, with that, we're out of time in trading hours. Stay tuned. Halftime Report is up next.